We actually officially start at 12.
Yeah, but I don't see no waiting around here. That's why you shot was in there. You won't think this is why 8 or 9 o'clock. Because they all sat at home.
There you go.
They ready to come here. It was good. Tell the Roberts going to get all this stuff. It's going to work and they help for their own stuff. So this came and collected all the electronics, all the passports. I don't know what they can do with the passport. What did they say? Are you our lecturer, mister?
Yes, I am.
Oh, okay.
Today.
Only today? You want to open next week?
Yeah, for the next 3 weeks.
Oh, okay. Well, nice to meet you. Take one of each, I think.
Yes.
Yeah, a little fast, sorry.
Fine.
You got one?
No.
Okay. Oh, that's very nice. Because where they have the treatment for the young girl from St. Anne's, I had to end up popping with my own show. Everybody from Christchurch with people from.
I think I've been walking around here with a girl. She had to take a school off and over. You get this one.
Yeah, the girl died from a rare breed. A rare breed. Oh, you catch it out.
I ain't been in the doctor.
Unless you drive, I might have my home. Yeah, she had a brain tumor, like they operated on it. They couldn't take the whole thing out, she was on the nerve or something. And then when it came back aggressive. Rebels didn't recognize you. Oh, little children. Take one of these. I just come walk with you. No, I parked my car. You found parking spot today?
Yeah.
It was just to leave it
As soon as I can get a boy, yes.
just over it. everybody walked in the drop in. And I told her, I go, no. When she got off the line, I go, you don't have to walk in. I said, but you have to do afterwards. And then she said, who's one of them? Yeah, on the beach. That's where she was. I walked to the beach.
It ain't?
Where they just have to go on the glass and go all of a sudden go to the water to come to work.
Oh. Wow.
It's nice there. The North would be. I thought it was nice in the morning. She can do that. Oh, he nice. Then they go. I don't know. I don't know. They recommended it on the phone.
No, I find people in somebody access from their office.
You know, whatever you want.
No, I know, but I mean, I done been there 16 years.
I did a good job on it.
What is it going to
I just got it. I was so happy. Still wasn't. Yeah, one piece. That's the last. You paid 50 on that. Take one of each of the black back, the white paper, and the IMF. You will never print the back. Get the next one. I want it to say.
Takes a good bad time.
Trust me, I had to read this for my job. You know, policy. You know, more questions and answers. You didn't go to the monastery?
Trust me, someone just stopped me on the road. They must go right when I was roughly in school.
My school, my last name. Yeah, that's my profession. They think it's my school. Why didn't you go to? Oh, I missed it. I grew all kinds of people. Those in the same class or?
No, she said, yeah, had me but we did track and field and basketball together. And her little brother and sister is that. I was in F10.
Oh.
We just woke up.
They just 26-year-old girl, she can She ready on it. But they didn't take her, because Peace was sitting on the bed or something. And then it came out. I did a 3 months that she was there.
It was funny,
Yeah, they
they
can't say it,
I had
but in
just
3 months.
spoken to her.
Excuse me.
I had just spoken to her. And then next thing you know, she was in the hospital. And then we had that function on Saturday to volume, right? And then that Monday she was
Okay.
gone.
All girls have my history.
No, I was here.
Those are you gonna come. After they say it, I'm not your mother. But I can't. I just won't. I can't even. I never had it. But after you realize you talk, I never been to trust.
Yeah. The first part, I like already from the middle of it. Because I do just like every day.
What are you doing? Did you come to my one?
I do just like every day. So this is like an easy part.
I actually think from y'all bad records. Why? Y'all do domestic business or y'all have domestic violence? And how much y'all paying back to St. Vagina? I don't even know. I believe this is, my company is not listening. It wasn't the amount of work to try and get back to the home office to we only paid $34 for a year. We actually show back.
Exactly. And every day.
But for $3,400, so it's not worth doing.
And the thing about it, right? The person.
But that's the way to justify that. So like, yeah, that's what we're putting now. You can get someone, you can get, we do it, that's like 100%.
How you doing?
Okay.
Right, I never wrote that.
It came back, you know, different name. He said he's gonna send it to you because I keep asking. I said someone email keep coming back, and he said he's gonna forward it to you.
I was wondering. I had a feeling that from you.
Because I sent it twice and it came back twice. And it's like okay.
Send something since the last one.
No.
She was supposed to send something.
She was supposed to get
Yeah, I
there.
understand it, but
I'm sorry. Oh, God, I need to stop already.
So how many persons do we have?
It's gonna be like 12. 12.
12 or 17.
45, yeah. You're not signing anything. You won't be doing it. You trying to hide?
Thank you.
They can find you.
So everyone is busy today?
Okay.
5.
I think one of the ladies just came from the funeral.
Oh, yeah, because I'm on what the Scotia. Yeah, the thing of my daughter and I, she went to Scotia. So maybe they're going to
All right, well, we'll wait about 5 more minutes.
Okay. You're late and you've been kind. You the value added on that. Can you do collective act and I can collective fine? No. Sorry. I don't own them. Who? Right, real rock. Every time it's small dollar.
But it's good to know, you know, so I don't have to live on.
Yeah, you always send people to that. They've been to my mom.
Yeah?
Girl, she's kind of
She's blessed of it.
and then come to find out the baby ain't fine. So they
Mud, wait.
got no crime right now. You're like, oh, wait. But they're going to come back and be $400,000. You come to people and
That's what they always say. Yeah, and then big people get away, and that's the small people. It's not like that.
you say you keep your job.
No,
It's not gonna be-
no. It might be like that with other people, but not in my area.
So y'all go after the wealthy. Y'all go beyond the middle class then.
Yeah, they go after everyone.
But depending on who you know.
I don't know that.
I didn't have pictures.
Like, you really can't invest.
You would pay these bills, you wouldn't have to buy.
I do the
Start robbing from
security
cocktails.
to the commission. So the in person, everyone informed.
Oh, you did? How did it go?
Actually, now, but they take you over someone to get a process to do it, so that it's not even spent past 10%. So they have been small person down to bring them.
Or they want to leave?
No, the way I do it now, the cost is gonna like is a large gap. So part of has to go inside. So they ran into again, pay that maybe. So they make cost, so you have to get it. So they have to the part work is right.
That's what my computer's doing.
That's good. After 2 weeks now, and I got a problem because now like his signature is on the check. You had to go take them or you know they can move the signature. So now you have to find two signatures until they get one person approved.
Who's Paul? It's the new,
Yeah.
the new one. George. Where does he come from? He was within a month.
Yeah, he was within Atlanta. But
That's the next one.
yeah. So who else?
Where did, what did you interview for?
Well, the one they were advertising was on the administration. So one of my coworkers, this is the law or staff said that we can sell. And that's like trying to figure out, you know. But I knew the lady was going to tell me, you just said something, and I used to say it. So, the guy
Where is this?
Hmm?
Where?
In the Charlotte House.
Oh, Charlotte. See the sound of it. Yeah, I was talking to George. But he's not bad. But I thought about it later, y'all. I fell. Well, hopefully you get it. Or if somebody comes, but then, like you said, I only have to see them keep them.
Right. So I have to find out why.
Now listen, when it took a road down, he's putting it
Then
together
it's
on
one
time.
take
I
time.
know, they need to get to class on time, because I have a flight. Yeah, Mr. Last. It's almost still to be right there, you know, you just pass it.
But I said it's going from Friday.
Oh.
Because we had already.
That's the 25th, 24th,
Right.
25th.
Do you remember we was in the book club class? This was the last weekend.
Yeah, we were.
No, before we did on the street.
August is end of starting evening.
Right.
January. No child like anything, so
Come back.
everything only happening Saturday anyway. Just come back Sunday on Monday morning. Don't listen to me, I don't have no place to stay, no pay, no nothing. I'm gonna pay. And your parents are gonna come.
Exactly.
Seems like Sarah Shanty.
I may have got this new child lit. So,
So be good.
right, exactly. I might make it a couple of
Okay, let's get started. Those who come in afterwards, I suppose, will catch up. So, my name is Pedro Delaney. Good afternoon, everyone. I'm a Canadian chartered accountant. I've spent a number of years as a financial controller, as a CFO. I've also spent quite a few years as well in auditing in the accounting firm. And
What I jumped in. Sorry, Mr.
that's fine,
Delaney.
go ahead.
I apologize, I just noticed.
I could now envision what you were like in high school, the teacher's assistant.
No, quite the opposite, sorry. I apologize.
I'm now an independent consultant. I run a small accounting firm, Delaney & Associates, and I provide consulting services. I've also provided consulting services to the Ministry of Finance, specifically in their VAT department. So I've been asked to participate in the presentation of this particular course on taxation. Of course, as you all know, it's a relatively new course. I think the Bahamas Institute of Financial Services only just started it last year. So there's still some development that is taking place with respect to the course. I've been asked to speak on taxation and taxation in the Bahamas. But before I get started on that, I'd like to understand who you are. So I'd like you to introduce yourselves. Tell me what you do. I suspect that every lecturer says the same thing. But I'm going to start over here, right?
My name is Ronaldo Russell. I work at the Securities Commission in the Information Technology Department, where we interact with every department there, basically, to ensure that everything is running as smoothly as possible.
And to ensure that they have the proper system set up to recognize VAT. Okay.
Yes.
My name is Nike Ferguson. I work at Santander Viking Trust in the accounting department.
My name is Spyro Trico, and I work for a company called Spyro.
How's that spelled?
T-H-Y-R. Like chicken pie.
Okay.
Won't forget.
Ms. Trico.
I work for a company called Gumball Bahamas Limited. Crude oil traders.
Okay.
Like,
I'm Shantia Musgrove. I work at Atlantis as an income expenditure auditor.
All right. And what's your interest in this course? Income expenditure?
To be honest with you, at the beginning, I thought I knew I wanted to take this course. So just to branch out, to finish, add to my knowledge of accounting, and because the taxes and foreign. But now that I have introduced it here, I wanted to, be able to see
To
if
understand
it could work
what it's
time.
about.
Exactly. As of right now, I feel like more confused, like she said earlier, as to which direction we're going, because it's still new, whereas I guess in the US, it's been there for years.
Well, we can talk a little bit about the direction, and, this class has to be, you have to participate, you have to interact, and you have to talk. I'm not going to go on to talk. And you are. We'll put some time in the midst of this.
My name is Lily Sonico, and I'm at the Ministry of Finance.
Sorry, what's your first name?
Lillis?
Lillis.
Yes. Work in finance and real property tax. And I'm interested in this because I heard my office is being combined with VAT and vice versa. So I
You
think I
heard that.
need to know
You
about
heard
this.
that.
I heard, I don't know what's happening. Everything in that office is tight-lipped. They're not letting us know anything.
Mr. Forbes is the top.
No, Ms. Strong doesn't talk at all. We don't know nothing. So I say, you know what? Let me just find out what the taxation is all about.
Well, I'm glad you mentioned that, so I could know what constraints to put on what I say.
You talk too much.
So I don't talk out of school. You know,
People can get everything.
when it comes to government and whatnot, there's a lot of protocol. And who is supposed to say what and when?
We like Vegas and him.
Good, those kind of things. Right.
We like Vegas and him.
Yeah, we like Vegas.
Oh.
Vegas,
And
exactly.
then-
What's
we
that?
edit the
Yes,
cameras.
stays in here.
I know, that's why I have opinion.
Then we edit the cameras. Yeah.
You edit that.
Yeah.
I am Paulette Money, accountant.
And, Paul, what's your interest in this course?
But like I mentioned, when I first came in, I worked at the Ministry of Finance, where I went to the existing, and I thought that's where I wanted to be. But I'm realizing now that I need to find my way back. So I'm exploring my own
So
avenues.
you're
I'm
one of those that's
preparing myself.
confused too, right?
Yes, to be honest, yes. To be honest.
All right, well, good. I mean, it's a wide range of experience and both the private and the public sector that's participating in this course. You would have all picked up one of these three pieces of literature. They're really intended to be reference material. One of them being, of course, the legislation for value-added taxes, the act and the regs. And the other being the white paper that was presented by the government approximately 2 years ago on Bahamas tax reform. I always say it talks about its title tax reform, but it really speaks about that. But it was their paper on tax reform. And the third document is a document by the International Monetary Fund, which was prepared with respect to the Bahamas about just over a year ago. It was, the review was in June and it was released in June 2013, released in about February, March of 2014, entitled Tax Reform for Increased Buoyancy for the Bahamas. It's a fairly comprehensive paper on the taxing structure of the Bahamas and the plan for the Bahamas government in moving forward to value-added taxes. So it represents very good reference material, and a lot of the information that I will use is in terms came from this particular paper and is reference to it. Of course, the legislation on that we will get into in the latter classes. I like to say that once you have that piece of legislation there, you're already getting a huge return on your investment in this course, because it's good to have the materials. When I call it government publication, I think of it 50, well, total it's about $90 for a copy of the act. Right? So that's your return for this course. Okay, so today I'm going to go through really two components of the course, and I've also provided you with handouts of the slides relevant to today's presentation. Now, I like to talk about taxes generally before we get into specific taxes, different types of taxes. And I know a lot of the focus here is on value-added taxes. But before we go to value-added taxes, I want to talk a little bit about taxation, the different types of tax methods, tax policy, and then the current tax revenue issues in the Bahamas. We're going to cover those two sections today. Next week we'll speak a bit on foreign direct investment, and we'll open the door to that next week, talking a little bit generally about that in the Caribbean, and then more specifically the design of that for the Bahamas. I don't know to what extent you've covered some of these things in your earlier classes, but taxation. What is taxation? Everybody has their own definition, I suppose, for it. But taxation is really the principal method by which a government obtains revenue into its fiscal budget. I know some of you from the Ministry of Finance knows that very well. But it is a means by which governments finance their expenditures by imposing charges on the citizens and corporate entities within their jurisdiction. So it's really the principal purpose behind taxation is really just to raise revenue. And the revenue collected is used obviously for a number of reasons. Some of these reasons are simply repaying debt. And here in the Bahamas, we heard a lot about that. The need to repay some of the sizable debt that we have in this country. Revenue is collected in order to meet the needs of capital projects. Improvements in the infrastructure for the country requires revenue. Yes, we oftentimes obtain a lot of our revenue from international loans, etc. But the intention is that internally we will generate revenue that will go towards the maintenance of capital projects. And then the really main reason of the revenue raising through taxation is to simply meet the recurrent expenditures of the government. Paying the salaries of the civil servants, paying the rent of the premises, etc., to keep government going. These are called the recurrent expenditures for the government. And I believe that that's truly the main reason why government, particularly the Bahamas, has been raising revenue. And you will see later on the extent to which the Bahamas government has not raised sufficient revenue. important to also say that governments sometimes use taxation to encourage or to discourage certain economic decisions and actions. So in a way, sometimes the way governments structure their taxation system, it encourages a certain level of economic activity, or it dissuades persons, natural persons, corporate persons, from making certain kinds of decisions. It directs them into a particular way that the government feels is beneficial to the country on the whole. We don't see a lot of that here, but that is facilitated a lot easier in the direct taxation schemes like income taxes. When we have income taxes, it's very easy to manipulate, and I don't use that word in a negative way, but to manipulate the system in order to encourage certain actions by the citizens in the jurisdiction. And this can be very simply, for example, in some income taxation systems, the reduction of the taxable income of an individual or a family, say by the amount of interest paid on home mortgages, may cause there to be an actual increase in construction activity and thereby create more jobs in the economy. So the way in which governments sometimes manipulate these taxation schemes can work towards certain actions in the economy. In this case, in this example, generating more jobs in the construction industry. So the comment there is that taxation can be used to stimulate economic activities as well. Taxation can also be defined in two broad classifications. Those two classifications are direct and indirect taxes. Atkinson stated that direct taxes may be adjusted to the individual characteristics of the taxpayer, whereas indirect taxes are levied on transactions irrespective of the circumstances of the buyer or the seller. So, a simple definition might be that direct taxation is a tax that is paid directly by an individual or an organization to the imposing or the taxing authority. Indirect taxation are taxes that can be defined as fees that are levied equally upon taxpayers, no matter their level of income. So, in that sense, it is indirect. It is not specific to your level of income, but rather you would find in indirect taxations, there's a shifting as to who is bearing the burden of the tax and who is actually paying the taxes. So a direct tax that is paid directly by an individual or organization to the taxpayer pays a direct tax to the government, for example, for different purposes. And these direct taxes might be real property tax, personal property tax, and of course, income taxes. I think that is more easily recognized as the most direct form of taxation. So direct taxes are different from indirect taxes. A direct tax cannot be shifted to another individual or entity. The individual or organization upon which the tax is levied is responsible for the fulfillment of the tax payment. Indirect taxes, on the other hand, can be shifted from one taxpayer to another. What do I mean by that? Well, indirect taxes, generally, the indirect taxes will cause there to be an increase in the price or the cost of goods to the consumers or the services that they're getting. So the indirect taxes will generally impact the prices in your economy. The consumers would generally end up paying more for their products or their services. So an indirect tax is most often thought of as a tax that is shifted from one taxpayer to another by way of an increase in the price of goods or services. For example, taxes on fuel, taxes on liquor, taxes on cigarettes, or so-called sin taxes. Generally, they're increasing the cost of the goods or the service. So people argue that an indirect tax is actually paid by the end consumer by way of higher retail price. Another example might be the import duty. Import duty on cars, which is paid in the first instance by the wholesaler or the importer bringing in the car. But ultimately, this wholesaler or importer who brings in the car and then sells it, he then transfers the burden of this duty to the buyer of the car in the form of a higher price. Thus, the indirect tax is such which can be shifted or passed on. As I mentioned before, indirect taxes also can be defined as fees that are levied equally upon taxpayers, no matter their level of income.
So that would be considered an indirect tax.
That is an indirect tax. And from the literature, some economists will argue that indirect taxes lead to a more inefficient marketplace. I'm not an economist, so I'm not going to delve into that. But again, because it impacts the cost of the goods and the services in the economy, it can create inefficiencies. So, what do you think might be some other examples of indirect taxes?
Sales.
Sales tax, yes. Already mentioned that.
Duty. Customs duty.
Very good one is customs duties.
Yes, indirect. Yeah, because they pay, he's paying the duty of the car, let's use a car.
Yeah, customs duty is indirect. I mean, if you're importing something for yourself,
Right,
then
yeah.
you may consider it to be
A direct,
direct.
yeah, okay.
But generally, all of the goods coming into this country is imported, majority of them imported, where the import is paying the duty, but then he's passing it on. And we know that when we do our pricing of goods for his costs, the customs duties then mark it up. So we pass it along to the consumer. Departure taxes. And also insurance taxes, insurance premium taxes, may be considered one as well.
What about the stamp duty for purchasing
property.
Well, I mean, that's a little bit more direct because stamp duty is paid by the person acquiring, but they're paying it as part of the cost that they're incurring. And if they were selling, there's still another stamp duty to be paid by the next buyer. So stamp duty is really more direct. But what other kinds of direct taxes that you can think of here, or just generally speaking? I mentioned one of them initially.
Income.
Income taxes for sure. Both of those are correct. National insurance contributions. There's still a little debate. Tax or contributions. There's still a little debate as to what it is. I think the international, in the international arena, they consider it a tax, a payroll tax. And it's very interesting because I did make note of that later on. But it's interesting because national insurance contributions are earmarked for particular reasons.
Infrastructure creates money.
So,
Show that
is it
that's a tax.
a tax
That's that.
that goes into, in our case, the consolidated fund that helps the government pay its bills, build its roads,
Create resolve.
probably should say build,
The
maintain its roads, et cetera, et cetera.
create resolve.
So that's going to be something for you to take home and think about. And I haven't come up with exercises, but I think it would be interesting to hear your views on, is national insurance a tax or not? Tax or not tax? And I'll throw in another little rare herring. There are many buildings in the country which are used by the government, which are built by national insurance contributions.
They should be paying us right.
Well, they do pay rent, well, yeah.
They just don't pay it. They owe
They
it.
do, they do, they do. And I throw it out as a red herring because for national insurance, those properties are considered investments for which they're to get in return.
So, it's like the money.
I happen to know a little bit more about national insurance, I think they're control of, yes.
So their national insurance funds are actually using to help run the government.
It depends on your perspective.
That's a tax.
I'm not saying that.
It depends on your perspective. And I say it depends on your perspective because national insurance accumulates a lot of funds. One of the primary mandates for national insurance is to invest the contributions that it is taking in order to be able to make benefit payments in the short term and more particularly in the long-term pension payments. So the contribution that it takes in now has to be invested to generate a return, a yield, and therefore the money cannot sit idle. It has to be put into something. In this economy, we are limited as to our capital markets. And further, there are restrictions within the National Insurance Act as to the types of investments that funds can be placed in. And this restriction is generally for a good reason. For example, you have an IPO that comes out, a new company trying to raise money. Generally, national insurance is restricted from investing in that. You have to have a proven record of generating returns before they can do that without further directions from the government. So the funds have to be utilized in some way. One way in this economy is always rental property. So yes, they do have buildings that are rented out, particularly to the government. So it is considered an investment.
I mean, I'd say it's an investment only if we collect in the rent. If NIV is actually being paid in terms I can see as what I'd say cash, is another question.
But if you have an apartment building with 4 apartments in it, you're renting it out, 2 of your tenants are very delinquent, they're paying you for half of the year. You
I
start
kick them out.
considering
Half the
investment.
year.
They're gone.
Oh, that's a dead investment, you put them on.
But see, I guess,
So you manage your investment in order to ensure that you get a return.
but it's,
To ensure, sorry, that you get the liquidity that you're looking for.
but I'm just saying it's different in this scenario because national insurance is owned by the people that has to pick up.
Yeah, that's what I'm saying.
So that's
It
why
makes
I
sense.
said it's a very interesting exercise to present positions on is national insurance a tax? Or is it not a tax?
Hmm.
So you can take that home to think about for a little while. So the basic distinction between the two, that is direct and indirect taxation, is that direct tax is a tax which is levied directly on one's income or wealth. That is what a person earns or what a person owns. On the other hand, indirect taxes are mainly consumption-based taxes, such as service tax, excise tax, etc., which have to be collected by one party, one entity, service provider. But they are ultimately borne by the customer who purchased the goods or utilizes the services. And therefore, the collector of the taxes, manufacturers, service providers, are merely agents of the government, collecting the taxes on behalf of the government. And for that reason, it's called indirect taxation. There's also another classification that we can place on taxation. And this one you're probably a little bit more familiar with in hearing, and that is progressive or regressive taxes. You may have heard people speak to taxation or a certain tax being regressive. But an important feature of any tax system is the percentage of the tax burden as it relates to income or consumption. So the terms progressive and regressive are used to describe the way the rate progresses from low to high or from high to low. The terms describe a distribution effect which can be applied to any type of tax system that is income or consumption. So, a progressive tax, and again, we're talking about whether the tax rate increases progressively or whether it increases in a regressive manner. So, progressive taxation is a progressive tax is one where the average rate of tax rises as income rises. So it is, the tax burden is progressive as the income is progressive. That is, the proportion of your income taken in tax rises as your income also rises. A regressive tax, on the other hand, is generally a tax that is applied uniformly and is unrelated, unconnected to your income. As a result, the average rate of tax is greatest for those with lower incomes. So again, the progressive tax is where the effective tax rate increases as the amount to which it is applied also increases your income, for example. Whereas a regressive tax is where the effective effective tax rate decreases as the amount to which the rate is applied increases. This effect is commonly produced where means testing is used to withdraw tax allowances, etc. But let me expand a little bit more on progressive and regressive taxes. A progressive taxation is based on the notion of ability to pay. That people with higher gross incomes are better able to make a larger contribution to the public needs. If your income is higher, you have a greater ability to bear the burden or to carry a burden to the public. So these persons, or I should say supporters of progressive taxes, usually argue that such a system is equitable and that progressive taxation can and should be used to redistribute income within society so that the final distribution is more equal than the original one. And therefore, redistribution of income should be a goal of society. That should be a social policy. So that's a little bit more of a liberal view. I recently had a conversation a day ago with someone who strongly opposed that view of redistribution of income. And that's one tenet to the progressive taxation, that those persons who earn more income, more wealth in the society or the economy should be giving a larger portion to the government. And then the government is able to use that to help persons lower down who don't earn as much. So they've redistributed the income. Of course, those persons who are the high wage earners, they disagree because they feel that if I've done what I needed to do in order to earn this level of income, why should you take a portion of it and give it to those below who are not doing what they should be doing? My brother who I was having this conversation with felt that it encourages laziness.
It does. I mean, in a
And
way it does.
he happens to live in the States, so I suppose maybe in the States it encourages laziness where you can fall back on a welfare system that is probably adequate to sustain you.
But that's why they're
But
revising it now.
if you're not in a welfare-based system, you have no choice, no option but to do for yourself, to pull yourself up. In the U.S., of course, we know that people can go to whatever the welfare department is, and they can get benefits and get welfare payments, etc. And they can sustain themselves at the minimum level that's required. And so the persons at the higher scale would say, why are you taking funds from me so that you can pay for these people who don't want to work, who don't want to help themselves?
We have that same situation almost now.
Do it. Yes.
We probably
Yeah, but in
don't
2 weeks.
need as much as
Yeah, but in 2
the
weeks.
US because we don't have that fund to cater to them.
What I
Okay,
don't know is
so-
they
so let's-
collect
let's-
NIB, what you call it, unemployment checks.
Okay,
had
but
to
hold on. Remember now, NIB is a contributory plan. They're collecting that based on the fact that they contributed. They're not getting a free handout. There was an element of a free handout when national insurance first started. There was something called, it's earned it, and you get something of national insurance that you have not earned, but you're being given. That distinction is benefits and assistance. Benefits is based on you having made contributions into the fund. Assistance is where a social decision has been made to provide assistance to you. So when NIB first started, there were persons who would have reached the retirement age without having had the opportunity to make sufficient contributions under the scheme to qualify for a pension. So they were granted an assistance, something called old age assistance, something of that sort. So those persons actually are benefiting when they have not contributed. Everybody else, and that time has passed, that's a grandfathering clause. That time has passed. Everybody now would have contributed the minimum amount of contributions in order to qualify for long-term payments. But that's not to say that there are not some forms of assistance payments that are in the system. And yes, there is that tenet of socialism in the National Insurance Fund. And that too, I've had that kind of conversation with the actuary. Whenever you design a social security system, there's always a social element to it. Those persons who have the ability to pay are making payments in order to help those persons who cannot afford to pay but need some sort of assistance. That element is always present.
Mike?
Sorry.
Yeah, I had a question, and I'm glad you were at NIB to clear this up. And this has to do with benefits too. And I'm going to use an example here. A male who's making more than his wife for 30 years in his marriage is contributing to NIB. He somehow falls, he doesn't have that job anymore. Now he's making less than his wife. He's still contributing to NIB, and then he dies. There's a widower's benefit that's supposed to be with NIB, but because the woman was making more than the male, when he died, she gets none of the money he put in. How is that a benefit? And where does that money go?
You don't want to know that.
Well,
Kind of
yeah, that's a question that causes me to stammer, but two things. Where does the money go? National insurance is a scheme. I don't want to use that.
Scheme.
Yeah.
But no, it is called a national insurance scheme.
Yeah, I know, like puns, no.
But the reality of national insurance is that persons are contributing now to pay for the persons of yesterday who are now getting a benefit. So national insurance depends on contributions coming in now in order to pay the benefits of those who are being in the plan. Now, in some places they call it a policy scheme. So where does the money go? The money goes into national insurance. It is not a direct pension where every contribution that you put in is earmarked for you. That's not the way it works. So it's not like if you want to go and get a private pension plan set up. So it's going towards it. The benefits are calculated based on what rates the actuaries come up with, tied to your level of insurable wages, etc. What you're talking about, your initial question about whether or why is it that the widow is unable to receive a benefit on the death of a husband has to do with whether national insurance will allow two sets of benefit payments. If she's getting a pension, I don't think that she also gets I'm not sure what it's called, I don't recall it's called spousal or widow's benefit or something like that. It's interesting though, it's something, it is something that has been before national insurance a few times, and I believe they continue to discuss that and to make adjustments. Because it comes into play a lot with children. If a breadwinner dies, then is there a benefit being paid to the children if the other spouse is still working? And it's a big social issue. There's a lot of conversation that's had regarding social issues at national insurance, and that is where the actuaries play a very important role, because they tend to, based on their knowledge of other schemes or other plans, they tend to put forward what's recommended and what is the best practices. But that specific question, I can't answer it directly, and I would suggest you even go to National Insurance unless you have already gotten a response from them.
No, I just want to say you can't get it. So
Yeah, but
you've been contributing for 60 years and now your wife ain't getting none of that. That's a lot of money. When they could have actually taken that money and put it in the pension, when we don't have national pension, which we should have.
What do you do? National Insurance?
No, I mean, a real like what you've been able to down.
No, but that's interesting because I think in those cases, right?
Politicians can double.
In those cases, I believe that they evaluate what is the higher benefit, and they give the higher benefit. For example, if the spousal benefit would have resulted a higher level pension than the surviving spouse's pension, then I believe she gets the higher one. But I don't think that they get both. But still, it is something that you can put to that mind, but make a note that it's still no one or two persons at every case.
So she was still working.
She was not getting
Right, she couldn't get the survivor.
I can't answer specifically because I don't want to mislead you. I don't want to mislead you in that regard. And as a matter of fact, you want to hear the gentleman who was in the class before, Mr. Thompson. I think someone walked him on, it was him. But he's now, he was there, he's back. But, I mean, that's a question that I have no difficulty in putting forward to NIA. So, progressive and regressive, we move off of that social element, get back into the capitalist program. So as I said, with progressive taxes, it is one where the average rate of tax rises as income rises. And that is that the portion of your income taken in tax rises as you become richer. For the average rate of tax to rise, then obviously your marginal rate must also increase. Progressivity is based on the notion of the ability to pay. And I've spoken to the fact of supporters who believe that it's equitable to do so. Now, on the other hand, regressive taxes. A regressive tax is generally a tax that is applied, as I mentioned, uniformly and not connected to your level of income. So it takes a larger percentage from low-income people than it would take from higher-income persons. The result is that the average rate of tax is greatest for those at the lower end of the income scale. So this means that obviously it hits the lower income individuals harder. It's progressive. So let's look at an example. An example of this would be a sales tax. Sales tax is it's an indirect tax. It's a consumption tax. Consumption taxes are inherently regressive. They're regressive.
Okay.
So, take the sales tax.
You can use VAT.
Sorry?
You could use VAT. You gotta run around it.
I'm reserving. So if a person has an income of $100 and pays $10 in a sales tax for groceries, it's a sales tax on groceries, or VAT tax on groceries, pays $10 out of his $100, that's 10%. He is paying taxes with an effective rate of 10% of his income. Compared to his income, it's 10%. However, if that person has income of $200, buys the same amount of groceries, and pays the same amount of $10 of sales tax, is now only being taxed effectively at 5%. So, as his income rises, the tax burden to him diminishes. And the inverse is also true. As the income declines, the tax burden becomes greater. And that's why a regressive tax is a tax that hits the lower income persons harder than the higher income persons.
Okay.
So sales tax that apply to essentials are generally considered to be regressive because the expense for food, clothing, and shelter tend to make up a larger percentage of lower income consumers' overall budget. They have to spend money. It's not discretionary at all. So in this case, even though the tax may be uniform, such as the 10% sales tax, the lower income consumers are more affected by it because they're less able to afford it. That's a regressive tax. Now, the taxes may not be designed specifically to do this, but this is the result that they have based on the spending patterns and the choices of the people affected by such taxes. Other than VAT, can you think of any other aggressive taxes in our taxation scheme?
Say consumption, right? So customs, once again, comes to mind.
Customs again. If we look at customs as a direct taxation, as the importer bringing things in for import or sell, having a person to go off and shop their groceries and they bring it in, they pay duty. So they are bearing the burden of that. Of course, because they bring in $500 worth of duty, they pay whatever it is, 35% or 25%, whatever the number works out to, that dollar amount. But their level of income may be less than the person next to them, who also bought $500 worth of groceries. But the amount of duty that they both pay is the same. But if you take that as a percentage of their earning, their income, the higher earner, he can afford it. That's only 5% or 1% of his income. But for the low income earner, that's 40%. So yes, customs duties is a progressive tax, a consumption tax. The customs duties have some other problems as well that WTO would have spoken to, and so would the IRA. Any other? What about gasoline tax?
Well, that's hidden in the cost of the gas. I mean, it's a tax, but we don't think about it when we go to the pump. But everybody pays the same amount, right? I mean, I think about customs when I bring in stuff in. You know, I think about when I go to the store, I think about the VAT, but the gasoline, you just put your nozzle in and pump. But yeah, you're right, it's the
But
same.
you're absolutely right. It is a hidden tax, but many hidden taxes are also regressive.
That's why they hide them. Because it'd be
And these are
associated.
examples here which might include energy, such as gasoline, or even the motor fuel surcharge on your electrical bill.
Is that a tax? We need-
No, that's
You don't know what it is.
semi-hidden because they tell you that you're paying it,
You can't
but
find-
they could have just added it on.
That's
Is that a tax?
What is that? And do they have to write the charges then?
I think the legislation allows them to do it. I think they have amended the legislation to allow for them to charge a surcharge depending on the prices of oil. Nobody monitors it. So whether it's done rightly or wrongly, I don't know. I know when I look at my electricity bill,
It's crazy.
the fuel surcharge is twice the amount of the electrical charge.
It's crazy.
Now, I mean, but I don't want to get into the VDC issue because that's very frustrating.
Yes.
The fact that there are two generating plants, one at Clifton, one at Blue Hill. The one at Clifton generates power at a cheaper cost. The one at Blue Hill generates power at a higher cost. But the majority of the power is coming from the Blue Hills plant and not the cheaper Clifton plant. So we end up paying more. Part of the reason being the generators at Blue Hills run off a higher costly fuel. Generate their efficiency in generating power is not as great as the efficiency in Clifton. But we've been doing that for years.
I suspect they would tax everyone as if they're being powered by the Blue Hill plant on the entire island, even though you know you're getting electricity directly from Clifton. But
do we
that's
have
just my
anything from
theory.
DC?
So why don't they switch it then?
They'll
Well,
never tell you.
Part of the problem too is maintenance. They have some significant maintenance issues, but generally with government, maintenance is an issue. They make a capital expenditure,
You know
but they don't want to make the expenditure to maintain things on an ongoing basis. And that's the way it is with government. I mean, I speak to a few other things, but.
Charging tax on tax.
I don't have the slide, I didn't put the slide here, but when you say tax is tax, I have a little picture, a little diagram that tells you there are two things that's certain in life: death and taxes. You can't escape it. You cannot escape it. So, that's what I'm
The rich people have certainly tried by investing.
Well, yeah, I mean, they have, but it doesn't mean that a rich person pays less in taxes. Proportionately, they may be paying less. But the dollar amount of taxes that they pay is generally higher. But it has less of a burden to them. It is less of a burden to them. Okay? And we can get into, since you mentioned VAT, yes, VAT, consumption tax, regressive. But some people would argue that there's a little bit of a progressive nature in VAT. For the same reason that if you're wealthy, you will probably use more services. You will probably go out to the restaurants and eat out more often if you are $100,000 a year earner as opposed to a $25,000 a year earner. So you end up incurring more taxes. Because VAT taxes services as well. If you're wealthier, you're going to use more services. The lower income persons tend to spend a lot more on goods, on consumption goods, as opposed to services. Some services are necessary. But if you are a high earner, income earner, you may go to movies, go to the cinemas, the plays, etc., and you end up paying more back. If you're a low income earner, you're not going to avail yourself of those services. So that's what some people argue is the progressive nature of VAT, or the little component, the little light within the VAT taxation method. And it's interesting because I now come to a note that I have here where, yes, the VAT is regressive, but in the UK, where the standard rate of VAT is 17.5%, it's classified as regressive. But the effects of this regressive nature is mitigated somewhat by the fact that they have zero rated certain basic items, like groceries, children clothing, books, etc. So even though there's a standard 17.5%, certain goods which are necessary, there is no tax. So the effect on the low income earner is still not as great. Those basic necessities are not taxed. We're going to talk about how that correlates with
Yeah.
Bahamas
And-
and that method a Saturday or two from now. We don't want to jump to that. Because you know, when it comes to that, we can talk for a very long time. A lot of views on that. All right, so taxation, you can take taxes and you can categorize it as direct, indirect. You can take taxation or taxes and categorize them as being regressive, progressive. Those are basically the two main categories in which taxes are considered. There's another category that we sometimes talk about, and I didn't take notes on it, but it's essentially whether a tax is an income tax, whether it is a consumption tax, or whether it is what I call ad valorem, or an asset-based tax. Those are the three categories that are used in considering taxation: income, consumption, or ad valorem. We know what income taxes are, a direct tax on your income. We know what consumption taxes are, taxation based on what you consume, whether it's goods or services. An ad valorem tax is basically a tax on one's wealth, a tax on the value of an asset, such as a real property tax. That's the only clear illustration that we think of here in Bahamas. Okay, in the literature, there are principles that we would apply to a tax policy. And in a context where many governments have to cope with less revenue, increasing expenditures, and resulting fiscal constraints, raising revenue remains the most important function of taxes, and which serves as the primary means for financing public goods such as maintenance of law and order, and public infrastructure. Assuming a certain level of revenue that needs to be raised, which depends on the broader economic and fiscal policies of the country concerned, there are a number of broad tax policy considerations that have traditionally guided the development of taxation systems. The OECD in 2014 published the fundamental principles of taxation and identified 8 principles which should be considered in the design of tax policy. They actually enumerated 7, but added the 8th one, not as a principle, but as a very important consideration. For all intents and purposes, it's a principle. These 8 are neutrality, efficiency, certainty, simplicity, effectiveness, fairness, flexibility, and equity. If you research the literature, you would find some of these identified with different names, but pretty much meaning the same thing. So, let's consider what these principles really mean. Neutrality. Well, these are taxes, or taxation should seek to be neutral and equitable between forms of business activities. A neutral tax will contribute to efficiency by ensuring that optimal allocation of the means of production is achieved. In this sense, neutrality also entails that the tax system raises revenue while minimizing discrimination in favor of or against any particular economic choice. This implies that the same principle of taxation should apply to all forms of businesses while addressing specific features that may otherwise undermine an equal and neutral application. So the tax should be neutral and not discriminate from one business to another business or one economic activity to another. It should be neutral in its application. Secondly, we have the principle of efficiency. And for efficiency, basically we mean that the tax method should have low compliance costs to businesses, as well as low administrative costs to the government. These should be minimized as much as possible. The cost of implementing and complying with the tax method should be minimal. The third principle is that of certainty. And the tax rule should be clear and simple to understand so that taxpayers know where they stand. A simple tax system makes it easier for individuals and businesses to understand their obligations and entitlements. As a result, businesses are more likely to make optimal decisions and respond to intended policy choices. When I read this, I think of when we started down the road with VAT, and then we pulled back, and then we had the consultants in from New Zealand, and basically they said, look, make it simple. Make it as simple as possible. Make it easy for people to understand. Forget about all of these exemptions. Make it just flat rate across the board, practically everything. And that's when all the long list of exemptions were eliminated, and the tax was made a little bit simpler. It's easier to understand. You don't have to go into the store and say, well, is this item really valuable? Is this not valuable? Generally, everything is. So that's one of those principles. And it's easier for the consumers to comply, it's easier for the businesses to implement. The next principle there is one of simplicity. And basically, the tax assessment and determination should be easy to understand by the average taxpayer. So it's simple, the rate is no, it's across the board, there's no questions to be asked. And I say that with a little smile because there are some complexities to that, particularly those persons in the offshore industry knows that well. Those are the first four: neutrality, efficiency, certainty, and simplicity. But another principle is that of effectiveness. The taxation should produce the right amount of tax at the right time. It should be just enough to generate revenue required for provision of essential public service. Taxation should produce the right amount of tax. If there's a class of taxpayers that are technically subject to a tax but are never required to pay the tax due to the inability to enforce it, then the taxpaying public may view the tax as unfair and ineffective. If it's not enforced, it is not actually applied, and therefore it is rendered ineffective. So the practical enforceability of tax rules is an important consideration for policymakers as well. In addition, because it influences the collectability and the administrability of taxes, enforceability is crucial to ensure an efficient tax system. The other principle that I have there is that of fairness. And in this regard, the taxation should be spread over as wide as possible section of the economy, the population, and therefore minimize the tax burden to any one individual. So it should be fair straight across the productive sectors of the economy and straight across the individuals in the economy. Flexibility is also very important for a taxation system. Principle number 7. Taxation systems should be flexible and dynamic enough to ensure they keep pace with technology, with technological and commercial developments. It is important that a tax system is dynamic and flexible to meet the current revenue needs of governments, while adapting to changing needs on an ongoing basis. Again, I think of VAT. There are provisions in there for the VAT rates to be adjusted or for the VAT controller to make certain determinations. I shouldn't say there are not provisions for the rate to be adjusted, but there are provisions for the VAT controller to make certain determinations. But more importantly, what I'm thinking of is the fact that the VAT filing is completely online. There's no paperwork. There's no coming in and paying the government, writing a check to the government, paying the government. It's all online. So it's keeping pace with the technological development or advancements, the digital world. And your taxation systems have to be flexible enough. It has to be able to adapt to the changing revenue needs of the government. And this means that the structural features of the system should be durable in a changing policy context, but yet flexible and dynamic enough to allow governments to respond as required to keep pace with the technological and commercial developments. Lastly, we come to the principle number 8 of equity. Now, simply put, taxpayers in similar circumstances should bear a similar tax burden, and those in better circumstances should bear a larger part of the tax burden. Now, it's easy to deliver equity through the design of the personal tax systems. Is everybody understanding equity? Should I expand on that a little bit more? I don't
mean on that.
I guess we're trying to weigh that based on what we discussed earlier about the regressive versus the progressive in terms of
Right.
the poor being.
And that's why I made the mention that the fact that it's easy to design it in a personal income tax situation. It is traditionally delivered through the design of personal tax systems. And when it comes to income taxes, for example, they can be manipulated. We can take families, you can give tax credits, you can give allowances. If you have a family of 5, you get an allowance of so much. If you have a family of 1, you get less of allowance. You can manipulate a personal tax system in order to provide some degree of equity, of a single person without the demands of children should be able to pay a little bit more taxes than the person who has children and has to deal with nursery, deal with medical, et cetera, et cetera.
And someone would argue though that, well, if you have more children, of course, you're using more of the resources, more education, more healthcare, and I'm already paying as a single person for that.
You will always have those arguments.
Yeah.
The conservative and the liberal, the left and the right.
No, personally, I have no
And
problem.
as you have those arguments, you move somewhere towards the
In the middle, right.
and make it really equitable.
So I'll pay for half of your kids.
So those are the basic principles that have been highlighted, particularly by the OECD, in terms of what is considered to be a good taxation policy. But the reality is that tax policy choices often reflect decisions by the policymakers, parliamentarians, on the relative importance of each of these principles, and will also reflect wider economic and social policy considerations outside of the field of taxation. As I said in the beginning, taxation can be used to stimulate the economy. It can be used by governments to encourage or discourage certain decisions and actions. So in considering the tax policy, the government obviously takes into account law things such as its fiscal requirements. It takes into things such as the views of the population, of the populace, the likes and dislikes. It changed the back rate from 15% to 7.5%. It delayed it for 6 months, taking the feedback from the populace. All of those things impact the tax policy creation of any government. Which leads me to my next question. What is the Bahamas' tax policy?
Is that right here?
That's the question. What is the Bahamas' tax policy? A little bit of housekeeping matters I didn't attend to. I'm not sure what the protocol is, but I see there's refreshments and stuff there. I don't know if you wish to take a break to get at those or just grab and eat as we go. Sorry? Okay. And when do you normally break?
We don't know before you get it. Yeah, we broke it.
We broke it.
At 2:30. So that's
Man, we
okay, I'm
take
gonna
a
get
5
something to
minute.
eat. You can
Take a
talk.
5 minute.
No, I'm
Like,
by 9 like you
I'm going
I'll
to
join you.
talk for a little bit more, but you can grab something to eat and then at this point, let's take 5, 10. So we'll just take 5 to 10 minutes, grab something, and we sit down and then we'll talk.
Is there anything you want to do, like, you want to have a progression on? Come on back there and
Mind you, my student interview was very short.
For the most majority of the families are related to health issues.
I don't remember how long. When I go to Kenya,
Like usually from work so that
I cannot say yes. The real purpose of NIU is really replacement. It's designed to replace your income, whether it's as a result of short-term interruption to employment or reaching family. And that's how it's actually done. It's calculated to provide a certain portion of your insurance wages to replace your income. So if you're off sick or something, then you get a certain portion of that. When you retire, you now get an actual long-term benefit. But there are some health issues to it, components to it, such as the workers' compensation. If you get injured on your job,
They didn't have a wait.
there's an element that kicks in to provide you with cover your medical expenses, provide some sort of short-term disability for you. But the short-term disability is still an income from you, but it provides all sorts of coverage of some medical expenses as well. Because I think this is my thing,
And I want to get to the definition what you feel that's something. Because I noticed you had
that's something. What I think, but that's a pet peeve of mine, is things are between taxes and I've argued that along with the Ministry of Finance, because it also comes with business.
and I saw that come out.
I have a very technical argument going with the Ministry of Finance.
See, what I think should this I have to decide if we because we need to know what it says if national insurance is
Yeah,
and because of the regressive nature, I think there should do first reading the system sometimes. I'm not thinking. I think you should get away with that. I'm going to try I never start for any child. I put it into any child.
The national health insurance is a whole different story.
But then on one of these things that have to do with those things like you say, I help me.
But yes and no. Even if you not be at work for a number of reasons, not be at work because yes, you're ill, you can say, well, that's health labor. You will have an accident.
They still covering hospital clinic and all that stuff.
Well, but only in terms of what compensation you're injured health insurance. But if you have injury at home, the causes you elsewhere, maybe for 2 weeks, well, you still get a short-term benefit to cover that. So, you have that, you have disruption of work because of paternity.
Still help.
It's a health, but it's a disruption of work. So once they're compensating you for not getting your wages. So then it's a wage, it's a income, but it's really smart, health insurance.
Yeah, but it seems as though a lot of these replacement rockets are related to health.
But then, so then you have to connect that to an employer's situation. What interrupts employees from providing service to employers? Check because always help.
That's correct.
So now the government's also looking at health insurance, not for that particular reason, but for the reason that the cost of health is so high. And that a person will access health services for below. And then comes the physical arguments as to pros and cons of that. But the idea that let's pool resources now and then use them to pay for the health benefits versus we have thought otherwise.
But some of them, that's one way. But some of them are still coming to the hospitals and getting service. And we paying for it. But they're not contributing.
Yeah, well, I mean, there's a responsibility to provide services to the indigent. And even under that, services is very important. It's not backable.
not a bad That's the part I She said we could have a study group.
What makes tax more complex for us is how we factor in how much goes towards immigration and taking care of people who are not necessarily legal.
But that's why I was saying, I would, if they could show me the right place,
I don't know better than that. We can fight for that. We can fight for that, right?
I took out my gas insurance.
Okay,
I put it
so
on my pocket.
is there a tax policy for the Bahamas?
Instead of.
Well, as far as I'm aware, the Bahamas does not have a stated or written policy on taxation. One should be developed, but there's not one that I can find access to. My inquiry of the financial secretary was that you really have to discern it from a lot of other things that the government does. If I had the time, I would have read the budget contribution, the budget communication by the Prime Minister, because in looking through those things, you get the sense as to what the government wants to do from a social perspective, taxing perspective, etc. And really, that's how you discern what's happening for the government with respect to its taxation policy. But I have determined that, as I indicated, whether by design or not, the Bahamas has employed various types of indirect taxation to raise revenue. As a matter of fact, the Bahamas has been very much strongly opposed to the introduction of direct income taxes. And we have said that for a long time, since we thought that tourism was important, an important contributor to the public finances and the economy, we have made it known that we don't want income taxes. And we've consistently not thought about introducing it. We can have a wider conversation about income taxes as we look at the current tax issues for the Bahamas and the introduction of VAT. But quite frankly, I understand the reluctance to introduce income taxes. My perspective is I understand the reluctance with regard to personal income taxes, but I personally don't feel that way about corporate income taxes. And again, generally speaking, the government has considered and planned for its revenue needs during the annual budget preparation. So the government looks at the level of revenue that it's collecting from different taxes and determine whether it needs to adjust those rates or adjust the coverage in order to increase its revenue production, which is generally the direction that the government has to go, increase and raise more taxes than reduce and raise less taxes. Another significant component of the unspecified tax policy of the Bahamas relates to the granting of tax concessions to attract foreign direct investment. Most of you would be aware that there are various concessions that are made to foreign investors with regards to tax. And there's a whole host of it. We do have a section on FDI, and we'll try and cover a little bit of that. But it's also a fairly complex area as well. One tax concession vehicle that comes to mind immediately is Foxwell Creek Bridge. There are tax concessions that are granted there, and it was earmarked specifically for foreign investment. And then, of course, you have the Hotel Encouragement Act, which grants local tax concessions as well. But the government's inclusion or the government's granting of tax concessions has to be considered a component of its taxation policy. So, what are considered to be the major types of taxes for the Bahamas government? I extracted this chart from the white paper on tax reform that was issued in 2013, because it does a good job of just summarizing the various heads of the taxes or the revenue and indicating their percentages. We see that customs duties, border taxes, including the stamp duties collected, account for 36.5% of the government's revenue, which was projected for the year 2012 and 2013. Excise taxes, which is another tax on consumption, accounts for 23.6%. Collectively, they account for about 2/3 of the government's revenue. Property taxes is about 7.5%. Business license fees is another 7% and then we go into smaller tax collecting, smaller taxation amounts. We have here the hotel room tax, which is another 3%. Interestingly, casino tax is less than 1%. I don't know how that's going to change if we add casino and gaming. Ought to change. I haven't worked the numbers, but it ought to change. So, this gives you the picture of where the government's taxation policy stands. Presently, 2/3 of government taxes come from indirect taxes, customs duties, and excise taxes, which all impact the cost of goods and services within the economy. When we talk about that, we talk about why the government has to shift in its strategy. We've spoken already about national insurance, which is the payroll tax, which is considered by the international organizations to be a payroll tax. We've talked a little bit about stamp duties, which actually is a decent revenue earner for the government. Like go back here, stamp tax actually generates 11.6% of the total revenue for the year 2012-2013. And most of the stamp tax is generated on real estate transactions and remittance of currency or financial transactions. We also have the property tax, real property tax, which is at 7.8% of the total. And that is levied, as you know, on real property tax, predominantly situated within Providence. And in that regard, it's really just a developed real estate in Providence, and also on developed real estate in Farming Islands, which are owned by non-Bahamians. And I'm not 100% sure, but my note is that undeveloped real estate in Providence owned by non-Bahamians are also taxed. I'm not 100% sure of that. But in the studies that have been done by the international organizations, the real property tax has always come up as an inefficient tax and one which needs improvement, and one which can generate a greater level of tax revenue for the government if it is made more efficient. And we will speak to that also a little bit later on. So, in one of its papers, the IMF, in considering taxation for developing countries, it wrote that the ideal tax system in these countries should raise essential revenue without excessive government borrowing. And it should do so without discouraging economic activity and without deviating too much from tax systems in like countries. Income tends to be more unevenly distributed within developing countries. Although raising high tax revenues in this situation ideally calls for the rich to be taxed more heavily than the poor. The economic and political power of rich taxpayers, however, often allows them to prevent fiscal reforms that would increase their tax burdens. This explains in part why many developing countries have not fully exploited personal income and property taxes, and why their tax systems rarely achieve satisfactory progressivity, and in other words, where the rich are really paying proportionately more in taxes. In developing countries, tax policy often the art of the possible, rather than the pursuit of the optimal. It is therefore not surprising that economic theory, and especially optimal taxation literature, have had relatively little impact on the design of tax systems in these countries. So those were some of the comments made by the IMF as it made recommendations with respect to taxation policies in developing countries. But I think if I was to continue further with the notes, it would be interesting that one of the things that the international bodies do when they are reviewing the adequacy of taxation policies is that they compare it to the tax level. They compare the tax level in a specific country to the average tax burden of a representative group of both developing and industrial countries, taking into account some of the similarities and dissimilarities between these countries. Now, this comparison indicates only whether the country's tax level relative to other countries is above or below the average. The most recent data shows that the tax level in major industrialized countries, that is members of the OECD, is about double the tax level in a representative sample of developing countries. And that is in the industrialized countries, it stands at roughly 38% of GDP. Whereas in the other so in developing countries where market forces are increasingly important in allocating resources, the design of the tax system should be as neutral as possible so as to minimize interference in the process, allocating resources between economic activities. The system should also have simple and transparent administrative procedures so that it is clear if the system is not being enforced as designed. Those are the views of the IMF when it comes to designing a taxation policy for developing countries. We'll see how far we can get today. Although Miguel did mention that we can go later if we wish. I'm not sure if that's a consensus, don't go until 4 or 5 o'clock.
What? Not today,
Not today.
maybe next week, no? I got a bit to prepare for. 4 hours.
You're
5
mentally
hours.
prepared for it.
I wish.
You just have to sit back and enjoy it.
They laughing, but they agree, but here, those laughers are laughing.
So make me laugh.
I just was testing to see whether after the food, if you were still
Definitely not.
percolating. After the food, we tend to dip.
That's right, that is.
Okay, so,
That's how you test the Bahamians.
um,
those Bahamian those.
current tax revenue issues in the Bahamas. These are what I have identified as the major tax issues facing the Bahamas for the past several years. And I say the past several years because with the reform that's taking place with the taxation system, some of these issues are going away, or expected to go away, are expected to go away. So, firstly, I have noted the year-over-year budget deficits that the Bahamas has suffered, and it's surprisingly high. Secondly, the increasing public or national debt to GDP, that ratio, which is a major concern to the international financing agencies, IMFs, and the IDB. And then thirdly, a relatively low tax intake as a percentage of GDP. Fourthly, very narrow tax base, and this is primarily with respect to the international import of goods. Fifthly, inefficient and ineffective tax collection efforts. And 6, high tax exemptions for investment, as investment
I
itself.
think that should have been number
It's
one.
amazing that the international community pointed that out, not the Bahamians.
Yeah, they have. And as I said, that paper by the IMF is actually a very good paper to read. It's very broad-based. So, year over year, the Bahamas has had budget deficits for the last several years. I haven't gone back 10 years, but I believe it goes back at least 10 years. And this is an analysis I had done earlier, which indicated in the 2010-11 year, the revenues were generating at $1.4 billion. The expenditures for that year were $1.8 billion. That produced a deficit of $371 million. That's 2010, 2011. In 2011-2012, the revenue was increased slightly, $1.44 billion. Expenditures also increased slightly, $1.89 billion, more than the revenue increase. Consequently, the deficit increased $450 million, almost $500 million. As a percentage of the GDP, that deficit rose to 5.6%. In the year 2012-2013, the revenue actually declined to $1.35 billion. but expenditures can decline. So expenditures, it was almost, I hate to be real, it was almost constant, 1.9 billion. I mean, it was 1.897, so it's only gone up about $3 million. $1.9 billion. But because of the drop in the revenue intake, the deficit increased to over $500 million at $545 million, taking it as a percentage of GDP, 6.6%. So this really tells the picture. Deficit climbing, as a percentage of GDP climbing. Consequently, debt climbing. Every time you have a deficit, you have to fund it by borrowing. So your debt keeps going up. As a percentage of GDP, climbing 55%, 61%, 66%, just keeps climbing. Major tax revenue issue for the Bahamas. I don't have the comparable stats, but although it's major for the Bahamas is still better than other Caribbean countries. Other Caribbean countries, there are some other Caribbean countries, some well-known ones, where this ratio is 80, 90, 100% of GDP. The reality is that most of those countries are in one of the IMF plans, structured restructuring plans, and one in particular, in the past year, less than a year, the IMF has mandated that it reduces its civil service. Civil service force had to be reduced. And I recall several months back, listening in on a conversation where they were going through the process of deciding which civil service should go on. Coming up with a method, a structure as to how do they determine which one. To look to see whether both parents are civil servants, if there are two, then you have to look to see who has the longest tenure. You have to consider family considerations. You have to do all of that, but they'll mandated. I don't remember what the number was, but several thousand want to be terminated.
Yeah, performance is great.
What you looking at?
But we're not here, we're bringing civil servants back.
Sorry?
Here, we're bringing civil servants back.
Yeah, that's true, they're bringing them out of retirement.
Structural consultants.
I can't speak to them.
You can't police force.
I
The
can't.
police force, all these persons that retired, they're bringing them back.
But are they being brought back as civil servants, or are they being brought back as advisors?
No.
Because there are a couple schools of thought.
Would be bad if they're
And
civil
there was a
servants.
recent one on one of the talk shows where the concern is persons exiting the employment arena at 55, at 60, at 65, when they're still very much productive. And the concern is that persons have reached this point, still productive, accumulated a lot of knowledge, but they're being put out to pasture. How do you utilize that knowledge base that has been built up? So are these persons being brought back as civil servants, or are they being brought back in advisory capacity? Because the reality is that as a country, we have a lot of issues that our civil servants are not resolving. So, we need some expertise.
Yeah, but the same
Needs and
expertise were there
skills.
too when they was in performance too.
Sorry?
The same, it still should be on performance because the same
Bring it back, the expertise.
who worked there,
Who messed it up?
when the same problem,
Yeah.
you got the same problem before they retired, so.
Well, it depends on your
Maybe that's why they
perspective.
have to retire.
Are we getting better, or are we getting worse? So,
Because they're double dipping, because some of them are coming back,
Yes.
already got their pension, and they
Can't take
back.
They're getting their benefit.
That's what you call double.
It's always gonna get worse, if you don't ever stop the problem, it's always
And
gonna
then the
get worse.
younger persons, because they're coming back at some of them, that I am aware of, they're coming back at a level where they're top heavy, still top heavy, and no one else, the younger people, are able to reach that level.
Yeah, well, as I said, I can't speak to it directly, I don't know, but, civil service has always been an issue. And yes, there is the concern that the younger persons cannot advance because the opportunities are not there for them to advance. I think that any government has to be selective as to how and when it dismisses people from service. And it has to be selective in determining which persons can still make a contribution. Yes, I'm aware of some senior persons who are still involved in civil service. I don't know them to be employed, but certainly to be providing services, civil service. But that's one of the things that has to be considered. As I was speaking more to Mrs. Barbados, which is required to reduce the civil service force. I believe the number was around 3,000, I'm not quite sure. But they had to dismiss, they had to reduce the payroll costs. And the reality is that a good chunk of any government's budget, certainly the Caribbean, goes to payroll. I'm hazarding a guess that we are probably 2/3 to 70%. We're probably something, I'm hazarding that guess, I haven't looked at the numbers. But a good chunk goes to payroll. So my point was that the Bahamas is not where it wants to be, and it's moving in the wrong direction, but it is still better, you know. We often say that we have a lot of internal debt, internal borrowing. We talked about the accumulation of domestic savings in national insurance, which is used for public purposes as well. So other countries in the Caribbean have a lot of external debt. That is one of the things that's really killing them, the external debt. We are fortunate that we are able to bring in a lot of hard currency, U.S. currency, and we're able to benefit from hard currency. Other countries are not able to do that.
Good question. Since the government already started collecting their VAT returns or whatever, do we know if they've actually started making an effort to pay off some of our debt? I mean, I'm just throwing it out.
They spending more.
Hmm?
They spending more.
I know, that's what I'm saying, so, but,
Let's stick a pin in that.
okay, we can see it now.
And when we get on to that, we can talk a bit more about that. Because I just pointed out to you, on average, the Bahamas is generating a deficit of $500 million.
Right.
That means that my recurring expenditures are greater than my recurrent revenue. That means yearly basis and spending more than I'm taking in the revenue. So what do? You have two things that you need to do. One, you need to reduce expenditures, and two, you need to increase your intake.
Will we increase the
VAT.
revenue and we increase the?
VAT
Yeah,
increases
yeah.
the intake.
Right.
Your question
Are we increasing
is, if we
expenditure?
increase the intake with VAT, are we paying off the debt?
We're reducing expenditure.
Well, if we increase that number, this number should be going down.
Yeah, okay.
That doesn't mean that there's anything going towards this 5.5 debt.
Yeah.
All we're trying to do is to stop some of the hemorrhaging. That was projected to bring in about 300 million on an annual basis. But the deficit is 500 and something. So how could you take 300 and pay off the debt? You pay this down by 300, your deficit is still going to go up. Because on the one hand, you're giving it to your finances. On the other hand, you can go back there and say, well, I still need to borrow 500. I'm giving you 300, but I need to borrow 500 back. So really, what you have to do is you have to try and get to a zero deficit. You have to get this balance.
Which means you still have to cut expenditure.
Exactly, we still have.
You still have to cut expenditure, but there are other, in the tax reform, if you look at the white paper, there are other measures that's being taken to boost the revenue base. And even though we say
The
that
vehicles.
VAT is generating maybe about 300 million, other improvements is supposed to boost it up a bit more. Someone spoke about some of the efforts that are being made now. That effort of combining departments is to bring together a more vigorous revenue management department for the government, and to tie a lot of things together, to plug some of the holes that existed. So, year-over-year budget deficits, that's what we've done.
One, I think our spokesperson from one of the international bodies had indicated that the 300 that we had indicated was a bit ambitious for the Bahamas. What is your take on that? Do you think that's something that we can do this first year?
Well, it's hard for me to say. The Ministry of Finance would have done calculations. They would have done calculations based on the level of consumption of goods and services. And based on those calculations, they would have said, well, you might tax this by 7.5%. This is the amount of revenue you raise. Now, the more you get into exemptions, then of course, the more you start playing with those numbers. And I believe that they have been fairly accurate in their calculation. Whether it's going to be 300 million or not, I don't know. But I don't think it's going to be, looking to see if I don't have the schedule that shows it. But in their 2014, 2015 budget, they have budgeted additional revenue of 50 million, which is the half of the annual amount of 300. Because 2014, 2015, VAT was introduced in January, so VAT is in play for only 6 months in 2014, 2015, and they have projected in their budget 150 million for it. It's doable, but obviously the proof is in the pudding, and that's what we're going through in these couple of months. So by the time the government gets to May, June, looking at its budget for the next year, it should have a fairly decent set of numbers to work with as to how effective they'll be in collecting the money. It's very new for the Bahamas, and there's a lot of learning to be had regarding it. This here schedule I put up is just really the budget performance for the last several years, and I'll see if I can quickly pinpoint something here. I was speaking to the deficit, and if I look at this here, the recurrent deficit, let's go to the total deficit. This is 2001, 2002. So that has been about, just looks like $240 million in deficit. So the deficit from 2001, 2002 has been $250 million. It stayed around that in 2005, 6, it dropped to about 180. And then went to, looks like 290, dropped to 187, and it went up from there in 2007, 2008, 430 million, 2009, 499 million. Now remember, 2008 was the time of the recession. That's when the financial recession really hit. Generally, government went into a mode of public spending in order to try and keep economic activity going. So it was a lot of deficit spending going on. So at that point, we jumped up to $500 odd million, and it maintained that really through 2010, 2011. It actually dropped off to about 250, down from the 490 odd million. I know it's not very clear, but my understanding is the primary reason for that was, yes, the sale of BTC. So a couple of $1 million came in from the sale of BTC, so the deficit dropped off.
to spend it somewhere.
But we're back up to the 400.
So we need to find something else to sell.
Sorry?
We need to find something else. Oh, no, they're never selling that.
Find something else to sell.
That's what,
Well, the selling of national assets is
they already
a
sold
whole
Baba there.
nother
yeah, it's a
discussion.
fight.
That's a whole nother discussion, you know?
Mr. Lady, before you go on, so what is number 11? I mean, what does that mean? GFS?
I thought they
Not
did
enough
check
deficit as a
when they were
percentage of
having
GDP.
problems
Yeah, what is
with,
the GFS?
pilot
The
plant.
GFS refers to a
Yeah.
statistic that the International Monetary Fund uses. I don't know exactly what it's made up of, but it is a government funding or financing statistic that they use. And this is what they're using to calculate the deficit as a percentage of GDP. So this is showing that if you were to take the deficit as a percentage of total GDP, it keeps rising. I cannot see it very clearly there. But in the early 2000s, it was around 2.5%. And then in 2008, it jumped to 4.5, then 5.5, 5.1, up to 5.5, and it just continues to decline. So if we were to look at this, we'll see that as a percent, it just kept going up.
Just going back onto that, I see that 647 in 2012, 2013. And I'm trying to figure out what happened.
647 in terms of,
The total deficit there from 509.
647.
I see we didn't get much revenue that year from the prior slides.
bought
And I'm trying to
cars.
figure out what
We
happened there.
got
Took
extra
some
cabinet.
flights.
Yes, we
Took
did.
flights.
Yeah,
Took some
cabinet.
Like
flights.
how did the revenue, what happened,
Go on to see the Pope.
Trips to the
Go on to see the
gym.
Pope.
And tried
Yeah,
out.
yeah, you're right,
I
you're right.
don't know.
Sweet,
I
private
don't
jokes.
know.
On to us.
So,
Oh, yeah, yeah. And they took
What?
my family.
Because I can understand the road works and all that stuff happened in 2011 or whatever,
Yeah,
something,
yeah.
right?
What happened to us?
What happened in 2000 after the election?
You know they can blame it on
After
previous.
the
Okay.
election.
Okay, what happened?
They spend the money on
So-
elections and stuff like that.
On the referendum.
so national debt.
Oh, yeah.
Oh, yeah.
Continue.
That was $1 million. That's what they say. How much it was?
National debt
$1 million.
continues to climb. If you look at the purple one, that is the combined national debt. And this, I pulled this from either the central bank or the budget communication. But if you look from 2000, 2001, let's keep going. 2013, we're now up here almost hitting $6 billion. 5.6, roughly $5.6 billion. Increasing public debt continues to climb. This here is just taking a percentage of GDP, the national debt. Once again, continues to climb. Huge jump in 2008, 2009. And then in 2012, 2013, I don't know what that has anything to do with that.
Direct charge? What is the?
Is it change or charge?
What is the
Well,
blue line?
The blue line is direct charge, which means that it is the direct debts of government. And then you have debt that government has guaranteed, or which would be like in the corporations, which are guaranteed, government guaranteed debt. So you have a level of debt that the government has guaranteed to international bodies or to banks. So you have to really, you take account of that as well. You combine them. And that's why the direct charge on government is just really jumped up by an even step. Maybe this here, this even step here. This looks like this is about six or so billion. Sorry, about a 6%, about a 6%. So the difference between these two here is roughly 6%, is about 23, 24, up to about 30. So all it is an incremental step if you look at the total compound interest. So remember, that was one of the major tax issues facing the Bahamas: year-over-year budget deficits. Secondly, increasing national debt. So even though the Bahamian economy, as the Bahamian economy continues to recover from the global financial crisis of 2008, 2010, the real GDP projected to grow at roughly 2.5% in 2013-2014. But despite the growth rate, however, the public debt to GDP ratio is projected to continue to rise, reaching roughly 62% by the fiscal year 2016-27. So unless you do something, there's only one way it's going to keep going, and that rate seems to be increasing.
Yeah, because jumping kind of added to this.
Man. And I already see some new company.
So, in his communication to Parliament, in his budget communication to Parliament, the Prime Minister commented, with public debt interest draining some $260 million of our annual budget and potentially trending yet higher. If we fail to act, we will reap the true fiscal dividend of our fiscal plan by reducing the burden of debt and thereby the annual exorbitant burden of interest payment. So he was commenting that annually we're paying $260 million in interest. That's coming up our budget, just paying interest. So unless we do something, we don't. When I get my credit card statement, I see how much they take out for interest. It's a motivation, right? I'm gonna pay this credit card balance off. I cannot afford to pay that amount of interest.
Right.
And that's his point.
But then he's continually spending.
Spending money.
And borrowing.
That doesn't generate income. Well, anyway, that's the debate about
That
it.
doesn't.
I mean, he
work
tried
on
to get
social
the money
levels.
back when he almost sold his house.
I can't believe you said that. I'm sorry. When he sold his house.
He accidentally sold
That was
his
my
house.
mistake. That was my mistake. I'm making him credit
Yes,
for that.
Randy, you know,
That was my
I
mistake.
ignorant the step in and get his house back. But yes, he
Hey,
I'm sorry.
No, not that.
Hey,
They
you
wanna
better
run-
watch out, he might sue you, you know.
Who?
It doesn't know.
And this camera
Around
go
here
away.
suing people, you know.
Low.
Bad.
They can't.
A third major issue
Okay.
is the low tax haul as a percentage of GDP. So I pulled one of the charts again from the IMF report, and it tells you that the Bahamas has, I'm looking at this line, this column here, has a tax revenue as a percentage of GDP of 16, 19, 16, below 20%. That's where the Bahamas stands. So the revenue as a share of GDP for countries in the region and the rest of the world is much higher. The Bahamas has the lowest tax to GDP ratio after the Central American countries. The Bahamas intake is approximately 17% of GDP. By comparison, the Bahamas' tax to GDP ratio is below the average for the CARICOM states, which is around 22%. And although the Bahamas is ranked 19th in the world for its per capita GDP, income per capita, it is ranked 92nd out of 98 countries in terms of its tax capital.
It's not such a bad thing.
We almost learned.
So,
I'm second. In terms of its tax effort.
the country utilizes, the Bahamas utilizes only 40% of its tax capacity. So that basically means that its opportunity to collect taxes, it is not maximizing, it's not optimizing the opportunities to collect taxes.
In other words, the property tax that we deem inefficient to collect, we just ain't asking the people to pay it. And we refuse to prosecute it because they are constituents.
And the 1%.
I wouldn't politicize it to that extent. I wouldn't politicize it to that extent because, no, there are some structural issues with respect to real property tax. And you may recall that one of the things the government was attempting to do was to get more of the properties on the register by offering the amnesty and the discounts and whatnot. The goal there was to come forward so that we know that we need to tax you. Come forward, so we give you a discount and we tax you. Now we have you on the record. So now next year, we can make sure that you get an assessment. And, you know, some people would say, well, why is that the case? Why don't we know all the properties to be taxed? And it goes back also to the fact that we don't have a land registry. So unless you record the transfer of your property, it doesn't necessarily come before the government. And then we also know from the inefficiencies there, many lawyers and many persons were not having their property stamped and recorded, or not recorded because they didn't want to pay the stamp duty. So they weren't recording it. So it wasn't being recorded, so it wasn't getting to real property tax. And then the government had to plug that hole a little bit by saying, well, if your property remains unstamped or unrecorded for, I can't remember what the period of time was, the stamp rate will double. So it tried to push them to getting it recorded. So there are a lot of structural inadequacies which need to be fixed. And these things didn't happen overnight. You know, so we now have to get into the mode of becoming more efficient. So the low tax effort and given the high GDP per capita implies a larger potential to increase tax revenue. I'm going to try and wrap up in here, maybe about 10 minutes. Just let us go. I'm skipping through a little bit more. Okay. Don't forget the exercise for next week.
Yes, national insurance.
Is it a tax or is it not?
All right.
Okay, so we have the low tax haul as one of the major issues facing the Bahamas. And then we also have, fourthly, the very narrow tax base for the country. And that is because primarily we're taxing only goods. And we're taxing primarily goods crossing over the border, coming into the country. So, before that, tax collection was on a very narrow base. And without personal or corporate income taxes, nor really a comprehensive consumption tax. And taxes were predominantly levied on goods and not services. And the service sector of the Bahamas contributes a significant part of the GDP, but for the most part, they were not being taxed. Remember I said that customs, duties, and excise taxes account for almost 2/3 of the revenue that's collected by the government. And this is duties, import duties, crossing the border. So this heavy reliance on border taxes creates a very narrow tax base. as I said, taxing only goods and producing, as was determined, inadequate levels of revenue, hence the significant budget deficits. Without personal income tax or corporate profit taxes and the comprehensive tax system in the Bahamas, the beginning tax system until now relied on a very narrow tax base. But in addition to that, the options available using these methods of taxation really limited the decisions that the policymakers could make. In addition, due to the reliance on the trade taxes, the tax system then became, or the tax revenue, became very much susceptible to external shocks. So, internationally, as we got into the global financial crisis, there was less imports coming across the border, less customs duties, less reliance, our greater reliance on tourism means less tourism dollars coming in, less opportunities for taxation, hotel tax, etc. So our methods of taxation at that point was very susceptible to external factors, external shocks that didn't allow our tax revenue to adjust, adapt, or to recover from. We also know that with the Bahamas' intention to accede to WTO, the border tariffs, these same customs duties, would have to be reduced, and consequently, a substantial revenue from customs duties will be diminished. It's another very important point. Now, we also have as another concern, the inefficient, ineffective tax collection efforts. Here's another comment made by the Prime Minister in his 2014-2015 budgetary intention. It is widely acknowledged that the administration of our current system of taxation is grossly deficient in terms of the efficiency and the effectiveness of processes and procedures, as well as the successful collection of monies that are rightfully due. The government has acknowledged the taxation system is inefficient, it's ineffective, and that this is fundamental. This is procedural. The procedures, the processes don't allow for the government to collect the taxes that it ought to be collecting. Some of the major areas in which the taxation efforts are inefficient and ineffective and creates low compliance is with respect to business license fees and with respect to real property taxes. We know that a substantial amount is outstanding for real property taxes, although this amount has not really been verified because there are properties which are not on the register. But we however know that there's a significant amount outstanding. Similarly, business license fees is considered to be inefficient as a consumption tax. Now that's something to think about. Business license fees as a consumption tax. And I will leave that with you to think as to why it is a consumption tax.
Everybody has to pay it. Some people make more money than others.
Well, okay, it's a consumption tax because it's a tax on turnover. Turnover equals sales. It's a tax on the sales. Now, it is not a direct taxation because the businesses are collecting. This is a license fee. The government says to the businesses, pay your tax based on your level of sales. The businesses pay you. Because the business pays the tax, invariably, they're increasing their prices. Their prices are going to go up. The prices have gone up in order to cover the tax on their turnover. So the consumer are the ones who are ultimately paying that tax on the turnover, and the businesses are simply collecting it. So that's why it's an indirect tax. The consumer is bearing the tax, the business is collecting it and handing it to the government. It's a consumption tax because the tax is levied on the level of sales. As consumers consume more, sales go up, the tax revenue goes up, the consumer is paying it. Now, business license as a broad-based tax yields a little bit of revenue. It yielded in 2010, 2011, roughly $111 million, or 1.5% of GDP. And about half of the amount of business license fees collected is raised from the three major sectors in the economy: banks, insurance, and telecommunications. So this other slide is basically saying what I just said, that business license fee are considered by the IMF as a consumption tax. And it's inefficient. The opportunity exists, and so does the inclination for businesses to understate its turnover when filing its return.
I was asking if business files return to environments rate up.
For business license.
Yeah.
Yeah,
I thought it was a
business-
state.
But it's not that we don't-
That's because isn't that why they were kind of shocked at the amount of persons who registered for VAC, because a lot of persons were understating because of the way the business fee is set up. People were understating, right, because it was linked to how much you would pay in the fee.
Yeah, there
So
are a
when
couple
they
of
registered
reasons
for
why.
VAC,
It
was
went
more
up.
than they expected, because they did the estimate based on the business license.
The 45, 48, or 100 businesses that were expecting to register based on their
They couldn't.
turnovers being in excess of 100,000 was turned out to be a lot higher. It was generally known that businesses were undervaluing their turnover
Yeah.
for business license purposes. That's one of the reasons why the number of registrants have increased. The second reason why it increased was because there's also a significant amount of businesses that have voluntarily registered.
Yeah.
So even though their turnover may be less than 100,000, they're still registered. I believe it's probably under maybe around 7,000 businesses. My projection is that it's going to be between 7 and probably going to go a little bit higher as businesses continue to register, because they have to determine that it's to their benefit to be
Yeah.
registered. And then thirdly, the government has required all vendors doing business with the government to register.
Yeah, they raised it.
Actually, let me correct that. To register, I believe for a TIN.
A tin number.
To have a TIN
A lot of the
number.
banks has them too.
Sorry.
A lot of the banks.
For banks, they
Yeah.
exceed $100,000. They have-
No, I mean persons who doing business with the banks has a lot of the banks put in the requirement that the businesses have a
Yeah.
tin number.
That's what Atlantis made them.
Yeah.
If you did not have a SIN number,
They wouldn't do
Atlantis
that.
would not do business with you. It actually forced some of the businesses to go right, because they were trying to say they never made that much amount of money. But when we had to go into the system and we pull it for 1 year, we like, you exceeded the amount, so you have to register. And a lot of businesses, they weren't doing it, then Atlantis cut them off.
Because a lot of that
So
happens
we're
in
not
the real
saying
estate
to
too,
them that they need to register to pay back.
if they wanted to continue.
Well, a lot of the larger businesses would encourage the smaller businesses to register because it allowed the larger businesses to be able to clean up.
Yeah.
It went down to the local fishermen as well. The local fishermen who still write on paper
Yeah.
had to go and register because
Yeah, I
they
know.
exceeded the amount.
Because
that
see,
they
when you look in
didn't
your
know.
system and you know when you
It's not-
paid them,
that's not
you know that.
necessarily-
Yeah.
That's what I say, they
That's
didn't
not
know.
Yeah.
necessarily the best thing to do. And when we get into that, we will say, well, I assisted the Ministry of Finance with a lot of their presentations to the farm finances.
Yeah.
The problem with getting the small businessman to register, even though his turnover is $50,000, because the hotel that he's supplying the fish to wants to be able to claim VAT,
Mm-hmm.
the problem is that that small fisherman now is obligated
To
to keep records,
Yeah, of what
to
one.
make a return every quarter or so,
Right.
and be able to prove his numbers.
Yeah,
The whole reason for having a threshold of
just
100,000
example.
is to not put that responsibility
On the
on the
small,
mom
yeah.
and pop
Yeah.
shops and the small places.
Yeah.
So I don't necessarily agree that a big business should force a small
Small
business.
Yeah, but that's the
But that's what
to
they're
register.
doing.
And then the question is whether they register for tin only or not. If they register for tin only, it does not benefit the larger businesses because they're
Right.
still, the tin only means you cannot charge back. So the larger business can't claim it back. The
Right,
government
they're
is saying,
charging
the government is saying they want you to register. I believe the government is saying register for tin only. I'll double check that.
Yeah, they have.
Simply because the government wants to track you in the system.
Mhm.
They want to know who you are, and they want to know that they can identify you by a tax item. As we move into the tax reform, I suspect that business license, value-added taxes, they will merge, and that persons will have one tax identification. All right, so you're gonna give me 5 minutes more to wrap up this session? We are almost done. Sure. We are almost done.
This is the way, so on that note, because banks now pay a separate fee for business license, not a
Yes.
separate, right, which is,
The business licenses,
Is
they have a
included.
separate calculation for.
right. And so how does that offend, I guess, not to say offend, but how does that work with the principle of that sort of equity across the board, because they're being singled out? Not that I disagree or agree, obviously, but the fact is that banks are said to have to pay not what a normal business would pay if they made the same turnover, but in almost a fixed amount of, say, 3 million on the license.
Well, I mean, I don't know what the government's rationale is, or what their stated reasoning is, but I think it was also well known that banks generate a lot of income. And the banks generally not paying hardly anything in taxes. So on the one hand, it brings into play the ability to vary. The banks were making the income but not contributing any taxes. And the financial services sector, particularly the banks, the commercial banks, is a major issue. Because the banks are not local. They repatriate their profits. So that means that the income that they are earning from the Bahamian consumers, the interest is being paid on their mortgages, the income is actually going outside the country. It's not even being reinvested in the country. There's no dividend tax, although I believe that something is I'm not sure now whether there is a there's a stamp duty now that's being enforced on the repatriation, but there's no dividend tax. So they're able to export their profits. So I believe that the government tried to address the considered inadequate level of taxation of the banks in the business license fee calculations.
I guess there was a suggestion, which I agreed with, was to tax the repatriated amounts, so to encourage them not to, to reinvest that back into the local country, and tax it at a higher rate than they're currently paying in terms of the business license, so that they feel every time they send money to Canada or wherever that, hey, we're going to keep more of this inside.
But why? Why? I mean,
That's the cost of doing business.
you know, the banks have their internal policies, right? And if you consider structured banks, happen to have worked in the commercial bank as well as social banks. The three major banks here are Canadian banks. They're obviously here to make a profit. The Bahamas generates good, healthy revenue for them. They're not going to reinvest all of that revenue back in the Bahamas. As a matter of fact, at one point, the banks were no longer interested in owning real estate, no longer interested in owning their offices. They prefer to rent. For whatever reason, it makes mobility a little easier. So they're not going to reinvest. So yes, you can tax their repatriation of profits. But you have to tax it at an appropriate level. I'm a proponent of the corporate income tax for that very same reason. Because in the case of the Canadian banks, there is no taxation on the revenue from the Bahamas. But when it gets into Canada, there is a tax. So you have the Canadian government benefiting through taxation on the income that's earned in the Bahamas, but the Bahamian government not benefiting from it. Secondly, you had the movement of the regional offices from the Bahamas to other parts of the Caribbean for the purposes of double taxation treaties. Bahamas does not have income tax. Other countries in the Caribbean, Barbados, Trinidad has income tax. So even though in those countries income tax is paid on their profits there, when they're repatriated to Canada, they get to deduct that taxes and they pay no more taxes in Canada. So they benefit from the double taxation treaty. So in that case, if you say, well, the total taxes paid is 25%, Barbados charge 10%, Canada gets 15%. Barbados got a share of it. In the Bahamas, total taxation in Canada will be 25% on foreign source income. But the Bahamas got 0%, so Canada still got Canada got the whole 25%. There was no sharing the taxation. And to me, that is something that ought to be fixed. Personally, I think that the business license fees ought to be turned into a corporate income tax, where you are taxing the net profit, net income, and you're not taxing turnover. The minute you tax turnover, it becomes a consumption tax. Because any business is going to say, I'm going to get that back from my customers. But if you tax net income, then what you're saying as the government and the business is that I'm a partner in your business. I want you to share your profits, whatever it is, 10%, 12%. I want you to share. It doesn't impede your desire to make more, because the more you make, you're still taking home a greater percentage. You're still taking home more. But with business license fees, I know of instances where businesses pay hundreds of thousands of dollars in business license fees. At the end of the day, they make zero income when they make a loss. They have a net income that's actually a loss, but they still have business license fees of $100,000 a day. It doesn't correlate. The taxation at that level doesn't correlate with the encouragement to the business to continue to operate. As a matter of fact, that kind of a business will eventually end up going out of business because they will have a huge liability to the government for taxes, which they can't afford.
I'm just asking, let's say, I'm going to use Scotia as an example here, because they're compressing, I'm going to use that word, compressing their services within the islands, and they're compressing. So if they're used to making this particular net income, or they want to keep it like that for next year, and they put on an hour corporate income tax code, then they're probably just going to try and keep the net income where it is, but let more people go and compress more. So then we'll have more Bahamians out of jobs, because they're going to still make the same net income no matter what. So it's still going to affect the people because they're not going to be working.
Right. But when we speak about income, we talk about net income, the accounting net income. Then we have the tax liability, tax expense. Then we have the resulting income, or the distributable income. So the bank may still make $10 million. They're paying taxes on that $10 million they've made. That's their net income. They're paying taxes on that. But the benefit of having a double taxation treaty is that that $10 million worth of income would be taxed when it got into Canada at 25%, so $2,000, $2.5 million. The Bahamas is saying, well, now I will tax you at 10%. So on that $10 million, you pay me $1 million. Canada still looks at it and say, well, your tax liability was $2.5 million. But because we have a tax treaty with the Bahamas, you get a credit for any taxes you paid in the Bahamas. So we deduct that $1 million. Canada, then the Canadian government just gets 1.5. The total tax liability to the bank remains unchanged. The total tax liability. In other words, Scotia and Canada still got the same net profits coming in because the total tax debt was $2.5 million. 1.5 paid in Canada, 1 paid in the Bahamas. If the Bahamas had no taxes, Canada will still get $2.5 million. So there's ways of working and negotiating, but as I said in the earlier slide, the Bahamas has always been adamant that it's not introducing any income taxes. The rest of the world hasn't. In fact, the majority of the Caribbean countries all have direct income taxes. And I don't know, I have it in my stuff here, but there's literature that speaks to that. The Bahamas is, by itself, is standing alone, introducing VAT, but has no income taxes. All the other jurisdictions that have VAT also have income taxes. You see, you can't just have a consumption-based tax, which is an indirect tax, which is a regressive tax, and not have any component that is a progressive tax on income or wealth. You need to balance it. All the other countries balance it to some extent. Even the larger industrialized countries, Europe, and VAT started in Europe. But they have income taxes, and then they have a consumption tax. And you have to reach balance. You can't generate all of your revenue needs by just a progressive taxation.
But with that, with the balancing of both, right? Wouldn't it be that the poor man will still suffer even more?
Why?
Because he would still have to pay the income tax along with
Right.
that.
Remember, one of the things I said earlier, and I'm not sure you were here, was that the government also uses taxation to stimulate the economy and to persuade certain economic decisions. With a personal income tax, the government can very easily say to you, your income is less than $25,000. Guess what? You pay zero income tax, or you get a tax credit. Your income is $25,000. You have children, 5 children, so automatically you get a family allowance or family credit. You can put a lot of different measures in there in order to balance it out. But with a VAT, basically, it's across the board. Now, the government is doing a couple other things in order to try and mitigate these impacts, such as increasing social services, benefits, etc. All right, so I have mentioned the inefficiency and the ineffectiveness of tax collections. Real property tax collection, and I had some more information, but I don't think we have time to go through it. But real property tax collection has been rising in the last 10 years. The dollar amount collected real property taxes actually rose. As a matter of fact, in 10 years, it has doubled. It has doubled it. It's actually in your paper there. However, the system of administration and collection remains inefficient and results in significant amounts not being collected. Since 2008, arrears have increased annually by an average of 28.5%, from $28 million to $97 million estimated in 2013 by the IMF. Assessments and the actual collections. So that's not, as far as I know, that's not necessarily speaking to unregistered properties. In 2013, $131.4 million was assessed on total property values of 14 billion or 14.6 billion. Of this 131 million, 35 million dollars was collected, and therefore the collection ratio is roughly 26%. So if you take the 35 collected from the 131, then you're left with about 97 or so million dollars that's uncollected. So that was the important thing I wanted to mention with respect to real property tax. This is a table that's in the handout that you have, which shows that payments in 2013 was $35 million. The amount billed or assessed was 131, and the arrears was $96.5 million in real property tax. And this is really the end. And I'm just introducing this. This is not the beginning. It's the end. High tax exemptions as investment incentives. Well, the IMF had noted that the Bahamas has a very wide range of tax concessions, which is used to attract foreign direct investment. These concessions cover taxes such as real property tax, import duties, business license fees, stamp duties, etc. So in order to attract foreign direct investment, they're negotiated away that they pay no import duties, they have 10 years holiday from paying business license fees, etc., etc. So additionally, with the Bahamas not having any income taxes, which includes capital gains, this serves as another significant tax concession to foreign investors. The fact that they do not have to pay any income tax, that in itself is a tax concession. No capital gains tax, another tax concession. So tax concessions, however, have further eroded the tax effort for the country and contribute to the narrow tax base on which taxes are being collected. So that's another major issue with respect to tax revenue for the Bahamas. So the 5 issues that were identified were, 6 issues. Year-over-year budget deficits, increasing public debt, low tax haul, very narrow tax base, inefficient and ineffective tax collection efforts, and lastly, high tax exemptions as investment incentives. So this is where I want to end. The high tax exemptions on foreign investment, foreign direct investment. So that next week, we will talk a little bit about FDIs. We'll talk about foreign direct investment and their impact on taxation. And we'll also talk next week on VAT. And we'll start by looking at VAT in the Caribbean, and then we'll move to VAT for the Bahamas. I have no real homework for you, other than that one assignment, which I think is interesting. I'll have to have a chat with Miguel as to how much homework you should be given. But you will find it interesting to continue to read the IMF report, the tax reform for increased buoyancy for the Bahamas. And you also have the legislation, that is the act and the regulations for the value-added tax. You may want to scan through that to get an appreciation for that. The other paper that you have, which is the white paper, it's a little bit passé now, but it spoke a little bit to the reasons why the Bahamas was moving ahead. And it also presented, in my mind, not a very convincing set of arguments as to why the other 2, income tax, payroll tax, etc., were not being considered. But it provides you with some information as to how you can consider the evaluation. All right, so I thank you for staying. I'm sorry that it went a little bit longer, but it was not entirely my fault. A lot of you came late.
You came late.
So, I think next Saturday, it starts at 12, I'm told.
Well,
I will start by
At 12?
after 12.
did you sign up? Did you do it?
Yeah, she has it.
Okay.
Should I mess with this?
Everybody has signed it?
Not quite.
You get the copies?
Yeah, it's been a while. How are you doing?
Oh, not in my bag.
Also remembering.
Because they're in my bag, they'll be upset.
But y'all know me.
Okay.
Must have been signed, sir. Sign the
Very
register.
good.
Sign.
Glad you enjoyed it. Sorry? Yes.
I think it's something.
Oh, yeah, that's up there. Well,
Yes. I didn't realize the way it was. Yeah.
they always tell me we all look alike. Not so much with the systems.
No, I don't think so.
All right, sir? All is well?
Great.
It's good, it's good. Yeah, sure we can have fun with that.
Yeah.
I
Will.
think, and I listened to you on the income tax. I think we've been marketing to the world that we're tax-free, and I think that's,
That's me glad, yeah.
you think so?
Yeah, because when do you think we have all of these harmful practices? Why have we been blacklisted? We're blacklisted because we have a zero tax base.
I guess for the citizens, I mean,
We have a zero tax base. So on the international arena, they look at us negatively. And I have put forward that if we had introduced a minimum tax amount, we can get off of the list as being a tax haven. Okay. Because we do charge taxes.
well, yeah.
Now,
Yes.
the major reason why the international community does not like zero tax-based countries is because they feel that they have very little records. They don't get the information on what the businesses are doing. But if you have a tax regime, then you have to collect a certain amount of information. And they, being the OECD and other agencies, then can get access to information if they need to. But we need to be a little bit more disciplined.
Yeah, it's almost, I understand what you're saying, and I think VAT is a stepping stone. I mean, I'm not a proponent of VAT, but now that it's here,
You know what?
it's consumption. I don't progress. I'm more of a social. I'm not gonna say socialist, but I'm more of a.
Then you should want that.
Well, you remember consumption taxes are generally regressive in nature. No. I would think when we look at ways of taxing,
You want these
like it was no bad to say tax the rich.
Right? But how?
So-
What
so-
you been contributing to it?
So you're a proponent of income tax?
Well, I'm not a public proponent. In other words, you wouldn't see me on television, but if you introduce it, I'm not gonna oppose it.
No, I mean, personally.
Personally, I believe.
I don't want any of the taxes.
Yeah,
Personally.
well, all of us would love, but I look at a more proportional tax. Tax me based on what I make.
Which is income.
Which is income tax, right. So everybody is taxed 10% or 20% or whatever the fixed amount is. It's easier to calculate. It's easy, and like you say, you can maneuver, who gets
You can adjust it,
exemptions,
you
who
can
gets credit.
modify it. But the
But-
reality is that for the Bahamas right now, we can't have them personally.
I know.
You
And
can
I would want
imagine,
that.
we have we have about 180 odd thousand persons registered for national insurance. You can imagine 180,000 income tax returns.
Well,
I mean, for example, we don't keep receipts.
yeah.
We don't keep documents.
I have another reason to say, I mean, because there's an underground economy in this country that, you know, isn't that how we grow?
They're always a bad catch, everybody. They needed to,
Well, yeah.
they needed to make.
That catches all businesses.
No, everybody.
Well, yeah, we pay VAT as citizens because obviously the tourist isn't subjected to the same thing, right? But in terms of the
Yes.
businesses,
Yeah,
have
but
to
when they
file
come
it.
in, they still paying back.
They are, but they will have an option on some items. They
Yeah.
will be able to get it refunded.
But at least there's a exemption. For the businesses, they have to file a return. When income tax comes, everyone has to file a return.
If you have
And,
personal income taxes.
Well, the
That's why I'm
personal
not a
income taxes.
proponent of the personal income taxes.
You know,
I think to generate the most money right now, I agree with that. Now, do I think it should stay like that? I think they need to put something else in. But to catch everybody right now, everyone, and get the most money, they had to do that.
You know what?
Question, what else could you do?
There's
Yeah,
nothing else
I'll
to do.
pay, I mean, it's a law. I follow the law, so I pay whatever.
But what else could you do?
If I had a choice.
I showed you that the government
Yeah.
needs $500 million more.
Yeah.
And WTO, you have to take down your customs.
Yeah.
Yeah, you gotta eliminate, but you know, they've been renaming it, you know, they call it excise duty. And
Yeah, they call it, but they still look at it the same way.
Yeah.
WTO still looks at it the same.
So, I mean, I believe we can really realistically reduce expenditure. All right, not to the extent to bring it down to the revenue that we, so in other words, if we made 13 million or 1.3 billion last year and we spent 1.8 or 1.9, all right, so we can reduce 1.9 to perhaps 1.6.
Have you ever tried doing that?
Well,
Have you ever
You
tried?
know what part of the problem is?
Have you ever tried reducing expenditures
and in my own house.
in your own house or in a business, right? Now, there's always a certain element of inefficiencies of wastage. So you can
Mhm.
probably squeeze out 5% or something. But look at the government. Every time you pick up the papers, there's this union want an increase.
Yeah.
That union is going on strike. So what would you do? Those are the same people who are also complaining that you put VAT on me. The VAT is there so you can pay the expenses. You're really $500 million in the hole. So now that you're collecting VAT, some people are saying, well, so you should be able to spend more then.
Well, so,
Yeah.
yeah.
You really,
Now,
they really don't
we don't have
understand.
I was about to say, we have welfare. It's just called a government job. That is our welfare system.
Yeah. And then there's
That
a
is
reason
our
to
welfare system.
give everybody a job. Yeah, so, yeah. It's, running a
And
government
that's
is
laziness,
easy.
that is
I agree.
promoting
Running a
laziness.
government is not easy.
Because all people trying to do right now, all the mindset of these people now, even younger children is, I want
A government job. I've never worked for the government, but I've always heard that, hey, but no, there's some, there's some good people, hardworking people who work for the government.
I agree with that.
But,
Yeah.
Like BTC, they have to let go of those people. And we knew this from a long time ago.
And really and truly, so, when we talk about what does the government, when you reduce your expenditure, and realistically that will have to happen for us. It's best for us to control it and not have an IMF plan to say by December 10th, we got after let 1,500 people go. Rather, we should show them that, hey, listen, we are taking strides
We're managing
to manage
ourselves.
our expenditure. Now, we're controlling that right now. And we want to control that for the,
Yeah, and that's where we always want to be. We want to be the ones
in control.
Yeah.
Now, as far as the consultants coming back, I have a take on this. Well, me personally, 30 years in the government system, you need to go. Maybe we need to work on our education or finances for those people who've been working in the system making money for 30 years. I mean, yes, they have things to do, but then open your own business and then promote
something else. Have some incentive for the government, for those people then, to open up their own business, to hire.
Yeah,
other people.
I don't disagree with that, but all I'm saying is that I know of persons who've been brought back into some, not positions, but advising the government. And I look at the amount of knowledge that those persons have, and I say, well, the government does not have a proper succession plan.
That is part of the problem too.
You see, and that is a huge part of the problem. So you have one or two persons who have been negotiating things, being involved at a high level, all these things, and there's nobody to pick up the slack. And they're now 65, 70, retired, and the government's still saying, look, I need you to sit on this committee, I need you to be involved in this.
Sitting on the committee is no problem for me. Is when you take a substantive position.
Right.
You're permanent secretary again, or you're chairman of this
But that
again.
person could open up his own firm.
Yeah, I agree.
And then he's really consulting with the government. He's not.
I work for and I work for Scotia, and with the exercises, I have people who've been working there for 40 years. Now, I came in from a different angle. But they've been working there for 40 years and they're crying, and I'm like, honey, you gotta reduce mortgage, reduce everything because of the loan policy. What you mean you won't pay off your house after 40 years? Where do you live? Old Fort Bay? No. I live right around the corner down through how come you? Well, I took my annual vacations and I borrowed $10,000 to go across the sea, and I bought. It's like, well, maybe.
That's education.
I mean, I'm sorry for my colleagues in that exercise, but I also have this thing that, listen, you've been here for, that's more than I've been alive. What have you done in all of that time? You and both of you and your husband work for the institution.
But that's why particularly the banks, like the Bahamas, because Bahamians generally are very high spenders and low savers. We don't save, but we spend. And that's why in the region with these banks, the Bahamas is the high earner. And that's why a bank like one of these Canadian banks could say, well, we want to generate all the revenue from the Bahamas, but when it comes to our costs, we're going to move our operations to a low
jurisdiction.
salary, to a low wage jurisdiction.
Take it to Jamaica, Trinidad. That's
But what are they really moving there?
Well, the latest round of exercise wasn't to take jobs out of the country, it was to actually cut the jobs
Altogether.
internationally. Scotiabank is reducing its employment staff internationally. In Canada, I think it was 1,500. So they have 1,500 for the outside of Canada, and we're a part of them. So we have about 60 or so.
So what? Are they just moving like?
They're closing branches. They're looking at.
I mean, the ones who have moved to like Jamaica or something.
Oh, the call centers. Yeah.
It's just it.
So there's no more jobs per se that I can think of that in this exercise that's going south. There are some jobs that were outsourced. Call centers, loan center, where if you have a loan and you go delinquent, you get some guy with an accent from Trinidad calling you, hey, Mr. Rusher, stuff like that, which I don't think is efficient, because if homeboy here can't collect the money from the fella he can see in the food store, I don't think the fella fought that.
I don't understand.
And I said that to my senior management. I'm like, guys, you're just doing this to cut costs, but you're not going to get and the other problem with the Bahamas is high delinquency. We're at the top of the chart. We get, one out of every 3 loan roughly isn't being paid. It's not performing. And so when you think about exit and banks being, the whole issue with, the regulation of the underground casino network or the online gaming net, all of this is reputational. All this leads to, okay guys, we don't need this stress. We can make money in Central America for less than the cost of what it takes to be in the Bahamas. We've already gotten our profits from the Bahamas.
That's the thing, they've already gotten it.
I'm just being honest, that's the discussion. We've gotten our profits. Yeah, new money may come in 20 years. We can come back.
That's what Royal Bank is doing in Trinidad, right? Going back now.
Yeah.
Going back, they buy back RPPT.
Oh, they bought RBTT, yeah. And Scotia sold Royal Bank, I think, sold Jamaica's brand, the Jamaican operation. Scotia follows suit, so Scotia Bank Jamaica, but then it's going to be